Hello traders, Gary Wagner here. Just about 10:40 in Honolulu, 4:40 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 12th day of December 2014, and this is the daily report for gold and silver, our weekend review, and what a week we've seen in this market. First to the precious metals. We do have lower pricing in platinum, silver, as well as palladium today, down off about $5 on the day in gold. Current print, 12.1260 off of a low of 12.1410 and a high of 12.2870. Now, silver, we do have slightly lower pricing off about a nickel, but certainly still within the realm and above $17 after the dramatic rise we saw at the beginning of the week. Now, we did mention lower pricing in the precious metals today. Silver actually closed up on the week, but all of this in light of a dramatically lower Dow Jones Industrial Average, Standard & Poor's 500. In fact, when we look at the performance of the S&P 500 this week, Dow Jones Industrial Week, the last time we saw this kind of a sell-off was really in January of this year, this being the second worst performance of the year. One in January, beginning of the year, now in December towards the end of the year. The market, which had hit a high of almost 2080, 2079 is where we calculated on this chart. We're looking at the E-mini or Standard & Poor's 500. You can see it sold off dramatically through the week, giving up a huge percentage. On a technical basis, where could this market go? And as you know, we are in preparation right now to launch our S&P trading service. That will happen, of course, next year. But what I am going to do for our gold and silver traders is, as we incorporate that, I am simply adding these charts into our daily show because they are all interrelated, and I think that it's important that we kind of follow them. So as I said, we could see this market drift lower on a technical basis easily to 1978, 38% retracement, and it's a retracement really off the most recent move that started in October of this year. Dollar is trading lower today, and when you calculate the loss that we're currently seeing in gold, down about $4 or $5, 440 right now according to the Kitco Gold Index, you've actually got trading putting gold down about $7.35. You're getting almost a $3 boost from this dollar weakness. So in the light of dollar weakness and lower equities markets, we do have lower gold, which is no doubt a pretty interesting dichotomy to the negative correlation that we have been observing between higher stock market, higher dollar, lower gold, lower stock market, lower dollar, higher gold. We're certainly not seeing that today. Now, when we look at gold, this is a simple daily chart, continuous contract of COMEX gold. We talked about this all week, but what we noticed was that when we do a fib retracement from 1346 down to, call it 1130, 1129 is where I'm pegging this low. I'm pegging this low right off of this low right here. And then look at our 50% retracement area, comes in at about 1237, 1238. We did have an intraday high this week, I believe, of around 40. And you can see that the market came right to this point right here, but absolutely stalled once hitting that. We never got close to testing this 54 area. And as you know from previous discussions, we're trying to ascertain when we look at this wave down, this correction down, we're trying to ascertain really what kind of rally we're looking at, and we're speaking about the rally that began at the beginning of November. We hit this bottom, of course, at 1131, and the key question has been, is this a counter trend to an overall bearish scenario, or were we looking at a key reversal? There were a couple of things that we were looking at. We're going to talk about all three. First of all, we cannot make that determination unless we get a higher high. That higher high has got to exceed 1254. We have had the first component, which is a series of higher lows. You can see that here as the market moves up, but it has stalled. Secondly, at a 50% retracement. So when I look at this, the second point, this being the first criteria, and then the last criteria is a analysis of some longer term work. Now on this particular chart, this is a weekly chart. It is a continuous contract of COMEX silver, but we put this out throughout the week. But what I've noticed in terms of a straight observation is that when we look at this long-standing resistance trend line created by these tops here and this top here, my sense was as we approach the apex, we would have a breakout. We got that breakout to the downside. Market moved and actually made a new low. That's this below the 61%, which I believe is a pretty critical level, but then found support and came back up. The key to me to discern whether or not we are looking at a counter trend or a pivotal key reversal is whether or not gold has the ability to break above that price point. As of yet, it has not. So as of yet, I am looking at this scenario as a counter trend. If in fact that is going to be the case, we could in fact see lower pricing in the precious metals markets in the weeks or months ahead. Now, with that in mind, there is a caveat to the lower pricing that we're looking at. As I had mentioned, a failure to break above this particular resistance trend line signals that we're probably looking at a counter trend. On the bullish side of the market, and there's not that much, but this last bastion of hope, so to speak, this very, very long-term series of fib retracements has a genuine harmonics when we look at two different fib retracements, one starting from 416, the other one starting from about just below 700. Both of these retracements terminate at 19 plus 1917. When we do that, we get this tremendous harmonics of 1168, 50%, 1157, 61% of these two different Fibonacci retracement time periods. And that to me tells me that major support in the market would have to be broken to continue a major downtrend. And for that to happen on a technical basis, we would have to go back and breach not necessarily these lows here at 1131. They are new lows, but we would really just need to breach these lows here, because this to me is where we have real support in the area, and it's very, very long term. So when you're looking at 1157 on a low of 1131, you are in essence in that area. It's broken through, yes, but not substantially. So these are the targets we would absolutely need to see breached for us to have the real technical evidence that we're going to see dramatically lower pricing next year. And last, I want to spend a few moments on my longer-term outlook on silver. We haven't really covered our longer-term outlook in a while, and as I prepare to do Outlook 2015, which of course all of you viewers will have first dibs at, I'll have a special edition released just for subscribers. When we look at this silver market and see the dramatic fall that we had when it actually came and just tested the 1400 area, we really had to go back to look at some historical points of time in which this particular price point made some sense. You can see that it was very supportive right in here. You can see right here it acts as resistance, also acting as resistance right in here. So to me, in terms of a price point, it's a pretty critical area, and the fact that it holds bodes well. Where am I looking at our next major level of resistance? And to do that, I'm really looking, and this of course is more long-term studies, but I'm really looking at the area just below $19 per ounce. We have a series of tops right in here. It's absolutely an area of resistance. Here it's absolutely an area of support. And my sense is that we've washed out the bottom on silver, and that we could see it either move sideways. If it does begin to trade higher, we're at 17. You've got about $2 on the upside short term in terms of where I think this market could go, say first quarter of 2015. This has been Gary Wagner, wishing you as always good trading. Talk to you on Monday for another daily update and review. Bye-bye. First off, I want to thank all of our subscribers for the loyalty that you have shown us over this last year. Starting last year, I started a program called the Loyalty Program. Now, the Loyalty Program, that I am going to repeat it, is only available for 1 month from now until January 1st, and it will allow you to get our best pricing ever at a maximum of about $83 a month. Now, all of you who are viewing this video are actually eligible for this particular service. And the way that you would enroll, from the top, you've got these options. Go ahead and press My Account. And then once you're at your account, press Add Renew Subscriptions. And as long as you're an active member, and by viewing this video you're going to get a couple of new choices. The first choice allows you an annual membership, $999 per year. It comes out to about $83 per month. It is billed annually. You would click that, and we have added a new one for those existing loyalty members, or for those who choose to. You can now get a lifetime membership, $29.99, $29.99, and this will allow you to have an account really that never expires. Now, with the Loyalty Member Gold, of course, you're grandfathered in. Your fee will never change. It will never go up. And to enroll in this, simply click on the option that you choose. And then once you do that, click Next. When you click Next, you'll get a screen similar to this, which will allow you, without a PayPal account, to simply use your credit card and go in and enroll for the Loyalty Program. We will be sending out a special notification, but prior to doing that, I wanted those who watch our daily video the opportunity to get this first. Again, this option will only be available till January 1st. For those of you who have been with me for a while and are looking to stay, this is really the best, most cost-effective way to get the gold forecast every day. As I said, at minimum, it runs $83 per month. And of course, the lifetime, it's going to be much less as the years go on. Again, thank you for your support.